All right, guys. So we are here today. It's Fed minutes report time, and the Nasdaq E-mini charts. This caffeine, bro. And there we go. We're gonna do a poll here, like we always do. We're gonna do a poll. All right. So, will the Fed minutes report cause a bullish or bearish response in markets? Vote on that poll. That poll is live now. You can vote on that poll. Whew. Need this heater, bro. It's cold. All right, guys. So yeah, the FOMC minutes report drops at 2 p.m. Drops live at 2 p.m. Eastern Standard Time. So we'll put that up at the bottom. We'll put the scrolling on the bottom so you can see it. PPI came out this morning. Small pullback on the day so far. Luckily, I took out a lot of my. I mean, the SPY's still up big over the last couple days. What's up, Kevin? What time is the news? 2 p.m. It's not an FOMC meeting. It's the meeting minutes report. It's at 2 p.m. We're going to get a timer up. So we got about 58 and a half minutes. This is when the report goes live. We'll cover everything as soon as it drops. Again, the Q, pretty flat. It's been a pretty flat time in the Q since July. Same thing with the SPY and the S&P. Roblox has been treating me right. Gold will go up or down. I have no idea. We also have CPI dropping tomorrow, which is, again, a pretty big release here. This is a pretty big report, like CPI dropping tomorrow. It's pretty relevant. Again, vote on the poll, hit the like button, help the channel. So far, 58% are bearish on this report, 32% are bullish, 11% say I don't know. We're also going to do a Twitter thing going on here. All right, so again, we're going to do we got this poll live on our Twitter page as well. All right, so the big short investment, Steven Eisman, says banks are uninvestable, but the consumer is in much better shape than many think. U.S. debt rose by 1.2 billion per hour in the last 19 days. Chipotle is raising prices for the fourth time in 2 years, according to Bloomberg. All right, team. And vote on this poll. Oh, thank you, baby. What is this? Mint green tea has got caffeine in it? Okay, thank you, baby. Love it. What a good wife, man. Bringing me some tea, dude. I need some caffeine, bro. Honestly, I haven't stopped working since this morning. You know, we just finished this morning stream like a couple hours ago, but we've been basically editing videos since, or a video since. Twitter poll acting weird. I'm sorry about that. Gold up or down? I really don't know. Pullback had nothing to do with PPI, in my opinion. I don't know, man. Inflation data was higher than expected. I think that's, you know, and again, you got to understand, like, technicals are cool, but like fundamentals are going to trump technicals in terms of economic reports. Now, long-term technicals might play out, but it's not pure one thing or the other, right? So it's not like all of today's red action is from PPI. You know, that's not a reasonable expectation. I think it's more so that, like, the market is certainly influenced at least some by PPI. And so, you know, well, Powell's not actually speaking today. Powell is just covering, or we're going to read a report recapping what they chose to do in the last session and maybe get some foresight into what they might potentially do in this upcoming one. That's why this is relevant. That's why this is important, is because, you know, it's going to detail why they made the last decision they did, which was a skip. And so there's going to be a lot of talk regarding inflation and stuff like that. Markets are pretty flat heading into this. You know, the SPY's not really down that much. You know, it's down on the day, of course, but it's been up a lot. If we look at a 10-day chart, you know, the SPY's still up very, very big on the day, on the last 10-day period. So the SPY is still up a lot. Bitcoin crashing. Is it really? Yeah, Bitcoin all the way down at 26.7 thousand. So it's a pretty big dip, pretty big drop. So according to this crypto page, they're saying that Caroline Ellison and Sam Bankman-Fried conspired to keep Bitcoin under 20K by selling customer Bitcoin. I mean, that's not anything the major hedge funds don't do, though. I can't really get mad at that, to be honest. Yeah, AMC's up. AMC's up to 1020s. Hey, let's see if it holds. I hope it does, dude. All right, team. Again, SPY at 434.11s. AMC all the way back down. Market is pretty flat awaiting this report. I mean, we got a gang of reports. So we have CPI. Today we had PPI. Tomorrow we have CPI. Today we have the FOMC Minutes report. All right, guys, we got 50 minutes, 51 minutes to be exact. Vixen 10-year pumping. Where's the 10-year right now? $4.61. So we look at a daily chart. Down. mostly from so I'm trying to see when this report came out. There's 8:30. I mean, the yield has gone up a lot. I mean, probably because stocks are down some, but yeah. So again, PPI came in higher than expected. We put this number up on screen so you guys can really see what went down. But here is the report. So PPI came in at 0.5% versus 0.3% expected. Last time it was 0.7%, so it was lower than last time. It was lower for sure. Like, it's definitely lower than expected. Or no, it's definitely lower than last time, but it was, noticeably higher than expected on everything. Yearly inflation, I think, was up to 2.2% for PPI. Now, this is not the biggest release. Again, tomorrow's report is the big one. Tomorrow's report is what you really want to watch. That's the one that is going to be highly relevant, highly important. And yeah, it's something you want to pay attention to. NASDAQ buy or sell. I really don't know. I don't know what gold's going to do either. I could look at the votes. 42% are bullish, 46% are bearish, 12% are neutral. The dollar index, we can take a look at the Dixie here. Dollar index is at 105.80. So the dollar index is pretty flat, all things considered. I mean, if we zoom out a little bit, you might not even realize, like, if we flatten this enough, it's pretty neutral. The dollar index is basically where it was yesterday at the close. During market hours, it had a red day. But it's pretty flat. It's starting to head back up, which signifies bear action maybe starting. But so far, we had a big move down, and then we rebounded all the way back up on the Dixie. And so, again, we're at 105.82s right now. And again, let me know what you guys would do, bro. I don't know what we're going to do here. Let me know if you like this music. We got some new music. Not new. It's pretty old, but I'm ready, man. Again, market is pretty flat, too. The SPY is right around 434.50 is the previous closing price. So we're pretty neutral, all things considered, man. Like, we're pretty flat. We're pretty neutral. Dixie moving up. SPY, look, here's the previous close, 434.50. How long's a Fed minutes? There might be a timer in the top left. There also, there might be a timer in the top left. Minutes should be available within 24 hours of the meeting. Why have these waves every few weeks? Insane. I like them. It gives me content, but I understand why y'all might not like them. I'm not really selling anything. Again, I'm sitting pretty tight. How long are you short or long in the SPY today? I think I'm long, but I've been long for the last couple days. I'm in a swing trade. I've already scaled out of some of the SPY. If I look at it, yeah, look, my average is 424s, and so we got in way back there, and we already scaled out of most of it when we were much higher than where we are now. And so I'm long, but have scaled out of most of it already. SPY for the last 2 days at the 50% retracement level so far. No close to attack. 424. I'm not sure where I sold, to be honest. I think I sold this morning somewhere. I think I sold it. Maybe I might have taken a piece off it. It might have been yesterday. It might have been today. I think I definitely sold a little bit yesterday. I don't know how much, but I've definitely sold some yesterday. I just don't know how much. FOMC meeting expects crash. This isn't the FOMC meeting now, brother. This is the FOMC Minutes report. We were rejecting at the previous close. So, yeah, this is the Minutes report. It's not the actual meeting. And so it's not, again, we got time. Like, we got a little bit of time. The next Fed meeting is not going to be until November. So we got to wait all the way until October's done before we really, like and share. Yeah, we appreciate it. We got 26 likes. We got about 150 people here. We still got minutes a while. And we're probably going to have a couple thousand people here at least when this drops. So it'll be fun. I think this dip is going to get bought up tomorrow. Yeah, maybe. I think we got CPI tomorrow, which is the biggest influence. Again, CPI expected tomorrow. Generally, the biggest report that we cover here on a regular basis is CPI. It's very relevant for markets. It's very influential. It does move stuff. And so, yeah, we got time. But we got the FOMC Minutes report, which probably will move markets a little bit. You got to take all of the data that comes out with a grain of salt because there's just a lot of different ones that are covering that are coming out over the next day. Again, CPI tomorrow. I believe expectations for CPI are 0.3% as well, though. So I think CPI data is expected the same way. I think it's expected to come in at 0.3%. And so I think it's all very similar. I think most of it's 0.3% is what I'm showing. Again, Dixie moving up. SPY just cracked lows on the day, just broke lows. Right, so there's a breakdown to 433s. SPY needs to close the 438 gap and move on. Yeah, maybe. Again, we talked about the support levels today. Let's see how close we got to our drawn resistance levels here. We talked about this one right around 437s, and we didn't even get to that yet. That's the high of yesterday. I think that's a relevant spot. $420.69 is the support. Spidey's the close. Yeah, I mean, the next support level, it's not, I mean, it depends on which time frame we're looking at, you know, so obviously one of the support levels is 420 for sure. If we zoom out and we look at the trend, we've been, again, we called this trend. We told you guys about this trend. We told you guys the bottom of the trend line, the top of the trend line, that we were in this trend for the last year straight. And so we called this trend, a big one definitely is around 420. You know, it's the bottom of this trend line. It's a whole dollar number. The 200 EMA is at about 425.79s. And so we got some time. But yeah, that's where we are right now. That's a pretty major level. There's a bunch of other smaller support levels, though. I think 430 is one, 425 whole dollar is one, right around the 200 EMA, and 425 is a whole dollar enough. And so we got some other levels too, but 420 is definitely the big one. But we got other stuff below us that, you know, is probably going to be pretty relevant also. You know, have you seen the gap that's open on gold? Do you think it'll get filled in the short term? I'm not sure. Gold did have a good rip up this morning. I didn't catch what it did for the rest of the day, but here's gold. Yeah, so gold held its gains much better than the other stuff. So again, here's gold starting this morning. You can kind of see this big run up in it. We've got this huge pump, and then we've actually held the trend. So I mean, you can see the trend is like this. We're going up, down, up. You know, still in that trend. Terrible drawing there. Forgive me, but that's the point I'm trying to make is we're in this trend. You can see the bottom trend line very clearly here on gold, right around there. I don't know about the top. I'm guessing I'm just going to call it, you know, a broader trend like that. But gold holding better than the S&P at least has today. But gold, you know, while long term it moves with the S&P, short term it's wildly different. You know, if we look at the last 180 days on the SPY, it's just a much different chart than gold. Gold is actually very red over the last 6 months. And when we're looking at the SPY is very green. You know, 6 months ago, the SPY was under 400. And so gold was, you know, almost 2,000 6 months ago. And so gold lagging behind the market a little bit. You know, the good thing about gold, though, is that long term, it typically beats the market. And so, for instance, gold has about 6 or 7x'd over the last 20 years, 25 years. The S&P 500 is about 3x'd, maybe 3 or 4x. I'll have to go back and look at the actual stats. But again, typically, gold outperforms the market longer term because gold is always a conventional inflation hedge. It's what people use to keep up with inflation, which is what most investments are. You're just keeping up with inflation because the dollar is devalued over time. Hey, all good, John. Yeah, we'll see. We'll use, we got a lot of little things that we can use to cover these reports too. Tupperware, huh? Yeah, dude, it's been so long since I've, All right, let me drink this. AMC back under 1020s. And again, we can look at the E-mini, we can look at the NASDAQ, we can look at the Q. We're watching yields as well. Again, yields at 4.6%, 4.6% for the 10-year. Can you all hear the music? You should be able to. You know, another look at yields if you want to see them just to get a good lead. Here's the 10. You just move it one decimal place to the left, and it's going to give you the yield and kind of how those are fluctuating. Again, slap that like button here, guys. Let's get over 100 likes if we can. We got almost 200 people here already. Still got 40 minutes or so until this report drops. 420.69 is the support. Again, you can see the 10-year yield. We could also see gold. Here's GLD, which is a gold ETF. It's at 173.70s. If we look at the actual gold futures contract, again, it's at 1800s, almost 1890s. Catch back up. I have a question. How can I see on Forex Factory when FOC is out, if it is up or down? What do you mean, bro? Forex Factory. I don't really use Forex Factory, dude. Thank you, Hassan. I appreciate it, dude. Yeah, you think FOMC is pushing it down? I'm not really sure. It's hard to tell. Like, what we're going to look at, there's a few buzzwords that you want to look. The SPY's in a very obvious downward trend since the inflation data this morning. Again, if we look at this trend, I think it's very clear, the trend that we're currently in. If we look, there's one. There's the bottom. Make sure I try to get the lines right, but that's about as close as I can get from it. But I think we're in this trend, and we've been in this trend on the SPY. I think the E-mini, it'll be a little bit more clear. Again, you're going to be able to watch the full FOMC Minutes report live right here at 2 p.m. Eastern Standard Time. Again, we're going to detail the full report. What you think gold will go down? It depends on what they say. Again, watching what they say regarding inflation is incredibly important, very relevant. It's something that you want to pay attention to, you want to watch for sure, because it'll just influence everything. And so it's something that you definitely want to pay attention to. And again, I'll cover it all. We use a couple of little tools to detail what's going on and to figure out like what is happening in regards to the market, like what the market is doing, what the market is showing. And so, yeah, again, we got some tools. And so we'll detail exactly what they say, but it's a tricky thing because basically the whole world is expecting a pause or skip during the next cycle. So the whole world is expecting a pause or skip. You know, everybody is expecting a pause or skip during the next one. And so with that expectation, if we do anything outside of that, the market's going to panic. Again, you can see the expectations for the next Fed meeting. Again, last one we skipped, and I believe it is a skip, not a pause. Or no, I believe it's a pause, not a skip. I'm sorry. Because, you know, a pause implies that we are going to sustain a lack of rate hikes, if that makes sense. A skip implies that we are going to skip this current rate hike and then come back with a vengeance with rate hikes on the next. Because last time we skipped and this next one we're expecting a skip as well, or because last time we didn't raise rates and then this next one we're expecting to not raise rates as well, I think what that ultimately means is right now we are going to be in a pause territory. So we don't know when we're going to raise rates again. And this report is going to give us some details on why that is. And again, we're going to break it down as soon as it happens. If we look at the page here, if we look at the actual FOMC calendar, which is where you want to look, you want to look at this right here. Again, you can kind of see this is going to be right here at 2 p.m. We're going to cover it quickly, though, and we've got some resources. So again, here's the September meeting that happened a couple weeks ago on September 20th. Here's the September report. And then you can see the minutes report shows up. Here's the July one. The minutes report will show up right here. You'll be able to click HTML and figure out what you want to do there, click on it or whatever you want to do. But again, we've got some tools that digest it very quickly. And again, I'll put this link up if you want to check it out in the description. But yeah. Hey, what's up, team? Again, slap the like button. My goal is to have over 100 likes if we can. It's super helpful. Why is silver lagging? Well, gold. What's the silver symbol? Yeah, what's the silver symbol? Oh, it's the Donald Duck song. Oh, man. Hershey's getting work today. I feel like I invested in Hershey's for a little bit. AH? Is it really? No, it's definitely not AH. It's SLV. Nope, not SLV. No, I mean the future symbol, team. The future symbol. Silver futures symbol. It is SI. Should have known that. Silver. Silver's at 22.13. Silver's pretty flat today. I mean, it looks a lot like gold, though. When you look at, like, here's silver. And then here's gold. Right, very similar. Gold's definitely outperforming it a little. But it's still pretty similar to gold right now. They're not going to move exact, and they're not going to be wildly influenced. Silver is less volatile than gold is if you look at a long-term chart. Although silver's had a pretty good year. It's just not as good as gold's. But still very similar because they're both precious metals, so there's sympathy with each other. Market's still falling down. We're at 433.50s here, 433.50s. On what basis gold can go down? All right, so look at gold start to dip. Here's the SPY. Again, we can also look at the Q. We can look at what Tesla's doing, down, Nvidia's doing. Again, these are probably just profit-taking corrections because the market is up so much on a short period of time. Again, here's the moves that we've had since early October, and we pushed all the way up from 420 to 430s to high 430s, almost 440. And so we're up a lot, and I think that makes sense. I mean, I think in that regard, it's just a slight correction or pullback, but maybe not. You never know. All right, let's take a look at the S&P again. Here's the SPY. Put up a 1-minute chart. Break it down for sure. Definitely in a bearish trend. Still technically red on the day. Nvidia's trying some too, but again, both of these are red on the day. Here's Tesla. Here's the NASDAQ, the Q, at 368.60s. I want to make sure some calls before it's too low. Tesla, Netflix, and Nvidia. Yeah, I'm in Tesla still. Green. Slightly red on the day, though, but still green. Nvidia. Netflix. Netflix is the most interesting dip, I think, because Netflix is down a lot over the last 20 days, 20 to 30 days. Netflix is down heavy since July. Last 2 months, Netflix is down a lot. It's been on a big bear trend. If we look at Netflix, again, I'm not saying buy it or whatever, but if you look at Netflix here, it's down a lot since July. Especially since September, early September. Look at this Netflix dip. And so Netflix looks interesting to me in that regard just because it's down so much. And I think Netflix long-term is fine as a company. I mean, maybe not. I don't really know, but I think that's probably the dippiest dip I see right now. Let's put my charting up here. Look at what the numbers are. Again, we're right at the previous close for the Q2. So the NASDAQ break even on the day. SPY slightly red, but again, we're still pretty flat. It's not like a super red day or anything. Yeah, we don't really call out anything. I mean, we call out price action and movement. We just don't make any picks. Like, I don't get picks. That's, sleazy markets. All right, so again, NASDAQ just went. It's technically green on the day. It's down to 368.40s. 368.40s. All right, still dipping down some. We are down to 368.50s. SPY still flooding down. Looking at our poll numbers, we got 300 plus votes. 49% are bearish, 41% are bullish, 10% say I don't know. I could look at my Twitter post as well. I'm pretty sure I did a Twitter post, right? Yeah, I did. Okay, good. Let me see what the results were. Okay, so we got 51% saying they're bullish on the FOMC Minutes report. 48.5% are bearish. And so the link up here so you can catch it. Again, slap the like button if you haven't yet, team. We appreciate it. Tesla trending right now. Again, the FOMC minute meeting report is trending as well. I wonder if AI assist works well. Again, Netflix trying to push back up. If inflation isn't up, isn't the dollar supposed to go down? No. The Dixie's going to move up with inflation most of the time. And so the Dixie is also going to trend against the market because here's the Dixie. So I'm betting it's up right now. Yeah, so I'm betting it's up right now. But it's never like a for sure. So it's never like absolutely it's going to do one thing or another. There's always variance. You don't really know how we're going to respond here. All right, and again, September PPI rose to 2.2% above expectations of 1.6%. Core PPI inflation rose to 2.7 above expectations of 2.3%. This is the first jump of core PPI since April of last year. PPI inflation is now up 3 consecutive months in a row. And so yeah, it's interesting to see what we get. But again, today's FOMC Minutes report, tomorrow's CPI report, it's just a lot of economic data condensed to a couple days. And so I think the market's scared. The market wants market wants to have favorable reactions here, but we're going to digest it quick. I feel like the Fed will become more dovish to balance out negative news of the war. I don't think they want to pile on anything. Yeah, the Fed likes balance. Like typically when the Fed does these reports, they do like balance. They don't like to be super polarized in one direction, highly influencing the market. They choose balance most of the time. And so if they pause, they have dovish talks after the pause. If they raise rates, if they pause, they have hawkish tone after the pause. If they raise rates, they have a dovish speak and Q&A afterwards. And so they do really like balance. It's something that I've noticed for a long time, digesting a lot of these economic reports is balance. Like they like balance. They want to see balance. They want to see neutrality. They don't want super volatile action to come from these things. And so, yeah, I mean, again, the next couple of days is just busy. PPI today, CPI tomorrow. Very, very relevant couple days. Can you please show us the gold chart? Yeah, so I mean, the dollar's shooting up. You can look at that correlated with like gold here. Sorry, let me find gold. Where's the slash? There it is. So you can see that correlating with gold. Gold falling down some as the dollar rises. Kind of have an inverse correlation with those two also. Yeah, they just like balance, man. The Fed likes balance. They always been like that. Like again, every major FOMC rate hike decision, right? Like every freaking one, you got somebody saying, oh no, like I know the 95% expectation is going to be for a skip or a pause, but they're going to raise rates, watch. And they're always wrong. And I always try to tell them the same thing, which is that, look, the Fed does not want to shock people. They do not want to jolt the system negatively. Like, I promise you they don't. If they do, think about the criticism that goes to Jerome Powell when that happens, right? Like, think about if Jerome Powell said, hey guys, we're probably going to pause, and then raise rates super aggressively and the market just tanks, right? Think about how much heat Powell's going to get. He doesn't want that heat. He wants to keep his job, you know. He not keep his job is not relevant. He wants to be looked well upon. And so, you know, he doesn't like shocking people. And again, you have to understand they're trying to balance things from the Fed. It's not just Powell, but the whole Fed likes balance. And it's understandable, like the Federal Reserve should like balance. That's what we want. And so the point is, they're not trying to shock the system. While us traders tend to like more volatility, that's not necessarily what the Fed wants. They don't really want volatility. Did my headphones just die? What happened? Let's disconnect. Disconnect. I'm going to mute this back. I think they believe war and fear might help slow economy. Ooh. Yeah, I don't know if this is going to work. I'm just going to put out these headphones. And I guess the main question is, do you think the market bounces back here? Like, do you think the market is going to bounce back right now? I really have no idea. Let me know what you guys think, but let me know if you think the market does. You know, I think, again, they do like balance. I think they might be dovish here. Again, we're going to digest it as quick. Understand, like, the Fed Minutes report is a 12-page document, so it's not small. It's a very large report. And it's a lot, you know, and we're going to read it, but we're going to give you cliff notes of it as well. The cliff notes are ideally what's super helpful is the cliff notes. You know, the cliff notes is what we'll give you, and that will help you understand what we're really watching here is the reaction to markets. Like, we're going to look at how much this is influencing the market, because you have to understand algorithms pick this up very quickly. They trade with it very quickly. They pick it up, you know, and so in that regard, that's a big thing. That's a big thing, an important thing. Like, algorithms are going to move the market as soon as this report comes out, and hopefully they move it in a favorable way. But you also have to understand how much the market's up over the last couple, and market's up big over the last 5 days for sure. If we look at even just a 15-day chart, you know, we look at the last couple days, you know, we were at 418s on the 4th, you know, so 6 days ago, 7 days ago, a week ago, we were at 418s. We are now at 430s, 440s. And so we've had a really green couple days. So even if we drop here, we're still going to be, at the very worst, I would say neutral heading into CPI tomorrow. And CPI is the biggest one, right? So when you rank them in terms of scale and influence, it would probably go PPI. It would probably go FOMC Minutes report, PPI, CPI. Are going to be the three big things that happened this week. And then bank earnings on Friday are very relevant also for everything too. So Netflix got hammered again today. Yeah, that's the only one I'm thinking about maybe buying. Yeah, I mean, I can turn the music off if you guys really want. I don't know if it's going to be bearish or not. I hope not. I'm typically a bull. Like, I want to see the market do well. I want to see the market go up. I don't want to see the market do poorly. Makes a good vibe. Yeah, I try. Music's good, I think. All right, guys. Hey, we got 15 minutes. 15 minutes. Did I monetize the stream? Oh, I didn't. That's why. Oh, man. That's why. That makes more sense. Anyways, SPY still in a bearish trend. What's your analysis on GU? Bank earnings will be strong with rate hike skip during quarter and higher enough interest rates for some earnings. Do you know when the Fed minutes report is drafted? I mean, is it drafted right after the last meeting? Was this? I'm not sure. Yeah, I'm really not sure when it's created. I'm assuming it's somewhere between the last Fed meeting and today, of course. But, you know, exactly when, I don't know. Hey, what's up, Brendan? Yeah, so again, I'm looking that data up. I don't know if I see anything. But what it says here, and again, we have to take other stuff into consideration. It says the minutes for each regularly scheduled meeting of the committee are generally published 3 weeks after the day of the policy decision. So yeah, that's 3 weeks later is today. And again, this will be a big report. I'm in a little bit of Netflix, yeah. I mean, I'm down on it, but again, Netflix has such a huge range. My average is 380s. We're at 360, so I'm $20 a share down. But I only have 8 shares, and so I'm down about $130, $135 right now. So it's not a huge loss. Will the market go up or down? Nobody knows if the market's going to go up, down, or sideways. Nobody knows. There we got Big Bruce. All right, guys. Hey, 13 minutes. Again, hit the like button. We got 70 likes. I'm not going to judge you, but I'll judge you forever if you don't hit the like button. Try it one time. It might feel good. Listen, everybody's doing it. I heard everybody is mousing over to that like button and clicking it, you know. Do it now. It might feel good. Just try it one time. Get some peer pressure. Again, gold at 1885s here. Gold at 1885s. Be okay, knows. I think the big boys want Netflix cheap before earnings on the 18th. Maybe. I think Netflix was at 211s back in October of last year. It's at $211. And so Netflix has had one of the biggest bounces this year. It's gone from 200 basically to 500 back down to 360s. So it's had a very good year so far. I remember when Netflix used to be like $800 or $700 a share back in 2021 in November of 21. It had a bad earnings report and it just destroyed the stock. Yeah, FOMO the like button. What about New Zealand US dollar? Don't know much about that one, brother. Not quite sure about that pair. All right, guys, CPI tomorrow. Again, we got the FOMC Minutes report today, CPI tomorrow. Next week, we got Tesla earnings. They're all very big reports. SoFi. See, it's been so long since I really looked at SoFi, man. Once it got under $10, I labeled it as a penny stock, and I just don't really mess with it. And then I see a lot of people hyping it up, but I just don't trust it anymore. It's got a good year, though. SoFi's got a good year on its hands. Like, here's the 1 minute chart. It's a 15-minute chart. Where's the 1 minute? There it is. All right, so yeah, here's the 1 minute chart. Definitely a red day. We're watching the 200 EMA pretty closely here, too. FOMC minutes, how does the outcome going to affect the US dollar? Is it positive figures or negative? It's not a given. Like, we don't know exactly how this is going to affect anything, to be honest. Like, we don't really know if this is going to affect it positively or negatively. We don't know if it's going to influence the market in a good or bad way. We don't know whether they're going to be bearish or bullish, dovish or hawkish, if they're going to say optimistic things, if they're going to say recessions. We don't know. What I can tell you is the buzzwords to watch. which are specifically recession, inflation levels, recession fears. Those are the two big things to watch. See what they talk about in terms of recession worries this year and next, or the year after, inflation expectations this year or next, rate hike decisions, upcoming rate hike decisions, for the rest of the year. Those three things are the most important things to watch, is what they say regarding inflation, what they say regarding rate hike decisions this year and next, and what they say regarding potential recession fears. They could say, hey, we're going to hit a recession this year, we think, or hey, we're going to hit a recession early next year. Or they could say, hey, we don't think we're going to hit a recession. The soft landing is going to be accomplished, or whatever they want to say, right? But yeah, those are the what you want to pay attention to. All right, team. FOMC today, FOMC Minutes report. Do you have Dylan Dennis or Logan Paul? Let me know. All right, again, the SPY up to 433.50s. Gold's still pulling back, though. Again, we can look at the Q, like the NASDAQ. It's pretty red today, too, though. They're both pretty red. These most of the time just do the same thing as each other. Although the Q is a little bit more resilient, it looks like tech is a little bit stronger, is what this means. And you can see the Q starting to push back over the previous close. And so, yeah, that's kind of how I feel. Logan's probably going to win if they even fight, but I hope he doesn't. Yeah, we got 10 minutes, 7 minutes, 8 minutes, but yes. Yeah, we got 7 minutes left. Again, hit the sub button. NASDAQ went technically green on the day leading up to this. Again, the SPY at 434s or so. The average 30-year mortgage rate is about $8 or 8.09%. Freaking AMC traders. Dude, okay, AMC traders talking about AMC secretly at $4,000 a share, bro. Y'all get out of here, dude. Ugh. All right, well, again, SPY still in this red trend. Still in this red trend. We got 7 minutes left, 6.5 minutes. Today, tomorrow, and the next day expected to be a roller coaster Fed meeting every next 3 weeks. Wait, what? Oh, yeah, today, tomorrow, and the next day is going to be crazy. Yeah, I mean, I hope it rips, but the market's red on the day. But the market's very green, though, over the last, 4 days. You know what I mean? So the market's very, very red on the day, but it's not, crazy red because the market's up a lot still. Again, you got to look at, a 10-day chart to really understand what's happened here. So today's pullback is this little blip, right? But the market's actually very green, and market was kind of in panic mode because earlier in the week it hit 418s on the SPY, very low. And we're approaching the $400 level. Market ended up rebounding starting, last week. It had a very green week, and then today's just a small little dip here is where we're at now. And it doesn't mean much yet. We still got time, and again, the Q drops. We got 5 minutes, but yeah, that's the way you have to look at it, Ruma. So you look at AMC at 10, and then you realize it's a pre-split price of $1. At 11, it's a pre-split price of $1.10. I have no idea if we're going to move up, down, or sideways. Nobody does. We're all kind of just speculating on this report. Nobody knows if it's going to be a good report, bad report, green report, red report. bullish, bearish, dovish, hawkish. Nobody knows. I'm honest about it though. I'm not gonna lie and act like I've got some super secret information. Nobody does. Nobody knows except for the Fed or insiders. And I'd rather just be honest and tell you that. We're gonna interpret it very quickly though. Again, we're gonna figure it out. And so again, all right, guys. Hey, we got 4 minutes, 3.5 minutes to be exact. SPY still dipping down, leading into this report. Q moving up though. Q, look at it again. Q's more tech based, more tech heavy. Q's moving up a little bit better. We got about 3.5 minutes left. 3.5 minutes. Is it risky to be a long here? I mean, it's risky to be anything right now, to be honest. Short term. Long term, you do whatever you want, but short term, nobody knows what we're about to get. Nobody knows if we're going to get good movement, bad movement, up movement, down movement. Again, nobody truly knows. CPI tomorrow is highly relevant. Yeah, CPI at 8:30. And again, stream. Or again, we're going to be streaming this live, like as we always do. So we're going to cover this live as we always do. Again, we're going to put it in sub-only mode now. So if you haven't already listened, the reason I call it beginner trading, I've been trading for 8 years. Okay. The reason I call it beginner trading is because we're a resource for traders. I cover a lot of economic data very quickly. We cover all the major economic reports like CPI, PPI, jobless claims, retail sales. We cover it fast, and we get thousands of people here during those major reports because we cover it reliably. We cover each one, and we cover it quickly. We have a bunch of different sources. And so if you haven't already, subscribe, hit the notification bell, slap that like button, guys. We got over 1,000 people here. We still got 2.5 minutes left before this report. The dollar index is the dollar index moving with the NASDAQ or the SPY? Yeah, so dollar index starting to dip. It's inversely correlated with the S&P. And so you can see it dipping down. Yeah, so here's the Dixie. Dixie started to drop. We're at 105.93s. 105.93s. Gold's still bouncing up a little bit with the rest of the market here. Would y'all rather the SPY or the Q up? We got 2 minutes left. Again, SPY or Q, team? Which one? All right, 2 minutes, team. Again, would you rather the SPY or Q? Let me know. Hey, thank you, V's. Appreciate the love. Let's keep the growth up. All right, guys, here we go. 1.5 minutes. All right, team. Again, we got about 1 minute left. Subscribe if you haven't. All right, guys, 1 minute. SPY. Yeah, all right, we'll keep the SPY up. All right, guys, less than a minute. Look at the Dixie pull all the way back down here. All right, guys, we got 45 seconds. 45 seconds. Gold down. Yeah, I mean, gold, it's not a bad day for gold. Gold's up a lot. I saw gold rip it up early this morning. We start our morning streams pretty early. I saw gold rip it up really early this morning. All right, guys, 20 seconds. 20 seconds. All right, team, y'all ready? All right, 10 seconds. It's going to take me a little while to digest it, but again, we're going to give you cliff notes as soon as it happens as well. Let's watch the market response. 10 seconds. 5 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. All right, there's the report. Let's watch the SPY. Let's watch the market response. Here's the SPY. Here's the dollar index. Market's moving up. No report is out yet. It's not out yet. They haven't debuted it on the site. Still waiting. Again, SPY's pushing up. We're at 434s. Again, the dollar index is dropping here, but I don't know if my computer's lagging or what. SPY's starting to move up some. Still no reports, so they're not out yet still. Nope, nothing yet. Waiting here patiently, guys. The report's not out yet. Okay, there it is. It's out. All right, guys. So we're gonna break this down real quick. So give me a second. All right. So the first one we're gonna go over is developments in financial markets and open market operations. Okay. So that's the first report we're gonna go over. All right. So let's talk about it. Let's see what it shows. All right, so financial markets. Number one, stronger U.S. economic data boosted markets expectations for higher future policy rates. Policy-sensitive rates rose moderately and longer-term rates increased. The 10-year Treasury yields went up by more than 40 basis points while equity prices fell. And again, the market's ripping up on this report. The dollar index is moving down. Bank stocks performed slightly worse, but sentiment towards the banking sector seemed stable. The dollar strengthened against other advanced economy currencies. China's property sector showed strain, but broader markets remained relatively calm. Nominal yields section says longer run Treasury yields rose with real yields increasing more than nominal yields. Inflation expectations remained well anchored. Factors contributing to the yield increase included strong economic data and policy uncertainties. Borrowing rates. Household and corporate borrowing rates increased following Treasury yield trends. Borrowers were not immediately impacted, and the pass-through effects might take some time. So expectations for the September FOMC meeting, no expected change in the policy rate for the upcoming meeting. The surveys indicated that the target range might remain unchanged until May of 2024 with a chance of a 25 basis point increase in November of this year. So next rate hike, there's a chance of a 25 basis point increase. Market expectations were slightly higher than survey-based expectations beyond the midpoint of 2024. Usage on the RRP facility decreased due to reduced participation by the money market funds, increased supply of money market instruments and treasury bills, slightly raised money market rates on RRP facility continued to act as an effective floor for the federal funds rate. Reserves increased to over $3.3 trillion, remaining abundant. The committee unanimously ratified the domestic transaction, and no foreign currency intervention operations were conducted during the intermeeting period. All right, so that's what I have so far. That's my quick summary of the first half of this, right? So, and I'm going to put up some other cliff notes in the chat so you guys can really digest it. All right, so they said the Fed meeting took place before the latest run-up in bond yields, is what they said. So the vast majority of officials saw the path of the economy as uncertain. Officials saw risks from rising energy prices and banking strains, as well as China's slowdown. All right. They also say officials saw monetary policy working to restrain the economy as intended. So basically, they're saying rate hikes are working as intended. Officials say they needed more data indicating abating inflation pressures, and officials saw risks as more two-sided. And so we're going to put some other stuff here before. Again, we're putting all these cliff notes in this chat that we're getting here. We're digesting these cliff notes. And so, again, the FOMC says that officials said strike could push up inflation and hold down the economic activity. So, again, they're basically saying the UAW strike could push up inflation and make inflation worse, as well as hold down economic activity. The auto workers strike poses new risks to economy, critical to keep policies sufficiently restrictive to bring inflation to target. So, basically, they're saying it's critical to keep a hawkish stance right now in order to help the economy. Again, we're going to put these cliff notes up in the chat right now, guys. So check them out in the chat. And again, they says the majority of Fed officials saw one more rate hike, one more rate increase as appropriate. And so again, majority of officials saying they wouldn't mind one more rate hike. We don't know if it's going to be this year or in December, November and December. And again, the market hasn't really reacted a huge amount to this. And so again, that's the start of my cliff notes here. We're going to give you some more stuff. All right, so again, I'm using AI to interpret this pretty fast. All right, so I'm gonna boil this down to 400 words. Okay, so as of September 19th and 20th meeting, this is 400 words or less explanation of everything. Okay, 400 words or less. Okay, I'm going to read this now. As of September 19th to 20th, the U.S. economy was performing well. Real GDP showing solid growth in the third quarter. The labor market remained tight, although job gains were slowly but still robust, and consumer price inflation remained high. However, there were signs of improvement in the labor market imbalances. Non-farm payroll increased at a slower pace over July and August compared to the second quarter. Both job opening rates and quit rates decreased, and the unemployment rate remains slightly higher, 3.8% in August. The labor force participation rate and employment to population rate rose slightly. The unemployment rates for African Americans declined, which is good, while rising for Hispanics. Wage date also showed a slowdown with 12-month changes in hourly earnings weight. The employment cost index and business sector compensation per hour lower than the previous year. CPI remained elevated but was showing signs of slowing. The total price index for personal consumption expenditure, which is the Fed's preferred one, is PCE, increased 3.3% over the year ending in July, with core PCE at 4.2%. Both were lower than the previous year, which is good. Survey measures of short-term inflation expectations decreased, but remained above pre-pandemic levels, while medium to long-term expectations stayed within pre-pandemic ranges. Indicators suggested solid economic expansion in the third quarter, especially in private domestic final purchases, including PCE, residential investments, and businesses. In terms of trade, real good export in July after a decline in the second quarter. Foreign exchange rates slowed due to issues overseas in the property sector in China and monetary policy restraints in Europe. Third quarter data indicated continued subdued pace of economic activity. And again, I think this is what's pushing the market up a little bit. Foreign headline inflation fell, but remained elevated, so higher than convention, with some central banks and advanced economies raising policy rates to combat this inflation. Central banks and emerging market economies largely held rates steady, and some even cut rates due to easing inflation pressures. All right, so I'm gonna go over the next section, which is staff review of the financial situation. All right, and I'm gonna skip this, and then I'm gonna go to staff view of economic outlook. All right, so this is the staff view of the economic outlook, and we're going to try to get this digested. I'm going to get a... All right. No. Okay. All right, so less than what, 200 words? So again, I'm going to get it to summarize this for me. All right, so here's 200 words of summarization. The staff's economic outlook for September meeting was more positive than July. Consumer and business spending seemed more resilient to tough financial conditions. They anticipated a slight dampening of GDP growth for the year due to auto workers' strike, but this would be offset by a boost to growth in the following year. Through the timing and size of these effects were uncertain, although real GDP growth from 24 to 26 is expected to be slower than this year. Below potential output growth due to delayed impacts of monetary policy action. So they're basically saying in the following years, the rate hikes over the last year are going to start to really show their effects. The unemployment rate was projected to stay relatively stable through the year 2026, balancing upward pressure from below potential output growth and improvements in the labor market. Total and core PCE inflation was forecast to be around 3.5% at the end of the year, with expectations of lower inflation in the coming years as supply and demand align better. And in 2026 year, both were expected to be close to 2%. So they're thinking that we're going to hit the 2% goal in 2026, which again is in 2.5 years. Considerable uncertainty surrounded the baseline projections, though, and inflation risks were skewed towards the upside due to potential persistence or adverse supply shocks. Monetary policy actions could induce downside risk to economic activity, especially if coupled with negative reactions in financial markets. And so again, that is... we're going to get another breakdown here, and everything is a much larger one. All right, so we're going to see if they let me summarize it in less. I'm going to try to do it 150 words here. Participants in the meeting discussed their economic outlook, noting that real GDP was strong and resilient, though they expected it to slow. They found the current monetary policy stance restrictive and saw inflation, though moderating, as unacceptably high. Concerns were raised about the household finances due to high inflation, tight credit, and reduced savings. Business conditions remained solid but showed signs of softening, with concerns about credit conditions. The labor market appeared tight, but various indicators suggested labor demand was easing. And while labor supply increased, wage growth moderated but remained above the 2% inflation goal. Inflation data indicated a slowdown with uncertainty surrounding future inflation. Risks included energy and food prices. While there were concerns that inflation might be more persistent, participants emphasized the need for further data to assess and progress towards the 2% inflation goal. Participants saw considerable uncertainty in the economic outlook, with both risks to inflation and economic activity. Some expressed the possibility of a government shutdown affecting data releases and credit condition tightening. Participants generally agreed to keep the restrictive monetary policy stance, with some expecting one more rate hike increase this year. They emphasized data dependency and clear communication. Balancing the risk of over-tightening and insufficient tightening was considered crucial in the process. Reducing the balance sheet was seen as integral to their approach. And so, yeah, basically what I've gotten from this whole report, and again, we're using AI to interpret it. This is a 12-page document, so it's taken me a little while to interpret it, of course, because, again, it's such a big document. What I'm gathering here is that the government shutdown caused fears. The worker strike could cause things to be worse in terms of the economy. And I think that's a self-evident thing, but that's what we're showing here. Still, they said it's important to balance. They think that we're going to raise rates one more time this year. And so it could be next. We have 2 more meetings left. Okay, so that means most likely at least this next meeting in November or the meeting after that late December, we're probably going to raise rates at least one more time at 25 basis points. That's what I'm showing here. It doesn't mean it's for sure. We're going to have to look at the numbers. We're going to have to see what CPI shows up as, because CPI this month is going to be relevant to the November decision. And so, yeah. That is basically the report. Again, we're going to give you some more cliff notes here if we can. So let me know what you guys think. Bull or bear? Let me know. Also, guys, check out one of our sponsors. One of our sponsors is a company called TopStep. If you want to day trade these economic reports, we have CPI tomorrow. One of the easiest ways to do it is a funded account program, and TopStep is the most legit one in the world. It's a great way to learn day trading because your risk is much more limited than putting up thousands yourself. You know, it's $49 for the base combine, and in the futures market, you can day trade the S&P, you can day trade some currencies, you can day trade the NASDAQ, you can day trade gold or silver, and there's no PDT rule. And the patterns are very similar to like blue chip stocks, but there's no PDT rule. And so most day traders day trade futures instead of stocks because there's just much less red tape. And these funded account programs are useful because most people are going to lose, regardless of whether they go on TopStep or whether they put the money up themselves. Most traders are going to lose, but it's a lot cheaper to lose a TopStep account than putting up the money up yourself. And if you pass it, you know, you get a 90% split anyway. And so there's not really any downside to trying a funded account program aside from putting up the money yourself. There's just much less risk, especially if you're new. And if you're good enough, it builds your skill. Taking these funded account programs, learning how to trade under pressure and building skill is incredibly important. And to get that for $49, it's incredibly useful and ultimately allows new traders to learn how to trade with less risk, but still learn how to trade under pressure. What they do is they give you a demo and they test your skill. And if you can hit the target on the demo without hitting the max loss and while following their rules, they fund you between $50K up to $150K with a 90% split, and you get to keep your first $10K in profit. And some paper trading accounts cost more than this. And so it's just pretty useful. Again, $49. If you lose, it's not the end of the world. If you're good enough to pass it, you know, you get 90% split. Free funding coaches as well for their members. Just a lot of cool stuff and resources. If you want to check it out, great way to help support the channel. I'm certainly biased in their favor because they pay me money. And so I'm incredibly biased, of course, because they're a sponsor of mine. But if you want to check it out, here is the link. And then now we're going to go back to interpreting this report. Ugh, I'm out of breath, bro. I mean, I'm definitely one of the top 3 readers in the world right now. Definitely got the reading skills of a king here. But dude, I'm out of breath. Anyways, market's pretty flat. You know, market's pretty flat. I'm gonna digest the last run of this report. Recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have slowed in recent months but remain strong, and the unemployment rate has remained low. Inflation remains elevated. The U.S. banking system is sound and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain, and the committee remains highly attentive until they chose to pause or skip. And yeah, let me know if you think it's good or not. Sounded like Rick Ross. Yeah. No, Powell's not speaking at 2:30. This is just the Fed meeting reaction. Like, this is the reaction in the cliff notes, basically, from why they chose to make the decision. It's the Fed meeting reaction. It's the reaction to the last Fed meeting. It's not an actual new Fed meeting. Like, we're not going to talk to Powell. Powell's not speaking today. This is simply a detailed report on why they chose to make the decision that they did in the last Fed meeting is what this is. Hey, all good, Rocky. Yeah, all good, brother. And again, my big thing, like, I'm neutral politically. I'm neutral in everything. I don't claim to be an expert. I don't want to be a guru. I don't want to sell a course or sell a service or claim to be an expert. I just want to give people free data, and I think that is, that is something that my channel has certainly grown on. Is just giving people free data, free information. Oh, it definitely has something to do with October. It gives some foresight into what their decisions might be. Again, we heard a couple different updates on this report in terms of what they might do during the next Fed meeting. Again, universally, they're all expecting maybe one more rate hike this year, right? And that's very relevant to what's going on. One more rate hike this year could stem from inflation fears. But what we are going to see, so a couple things that I've gathered from this report. Number one, and again, I can put some of the cliff notes here that I'm getting from other sources too. As you guys can see, one of the main things is that they're basically saying that they'll probably raise rates this year again, which a lot of people thought they were done raising this year, that they weren't going to raise anymore. But universally, everybody basically expects them to probably raise rates at least one more time this year. And so what this means, and again, let's check out the CME watch tool now, because we can look at to see what the probabilities are for another rate hike. 91.4% expecting a pause or a skip, which is weird because I would expect this report to show that they might raise rates a little bit more aggressively than anticipated this year. And so I would expect these percentages to switch and go down a little bit, but it still looks like 91.5% of people still expecting a skip next decision in November. But again, there's 2 Fed meetings left this year. And so the other thing to consider is that basically what they said is moving forward into next year and the year after, we're going to start to see some of the effects of these rate hikes. So these rate hikes have a lagging effect, and the Fed raises rates to discourage spending. Fed raises the federal funds rate, banking becomes more expensive, so banks raise interest rates to consumers. When interest rates are raised to consumers stop spending as much. When consumers stop spending as much, businesses thus lower prices to combat inflation. That's the procedure and the theory of rate hikes and what their ultimate goal is to do, which is to discourage spending, because when spending dries up, businesses lower prices and that combats inflation. But there's a lagging effect here. And so we're going to see the effects of these rate hikes moving forward. It'll be especially interesting with Friday bank earnings coming out. We've got JP Morgan, BLK, and a bunch of other bank earnings dropping Friday. Tomorrow, CPI inflation report. Very big, very big. And yeah, we'll see if we get anything good. So this is just the report. It's a reaction to the last meeting. So it's a reaction to the last Fed meeting that they had. It's not an actual press conference. Like, Jerome Powell's not speaking today. Gold sell. Yeah, gold has not really reacted much to it. We're going to see if the market can bounce back and hold. But yeah, gold's just not really reacting too much to it. All right, guys. Again, market is pretty neutral. We have gotten a bounce back. One of the optimistic things is that the SPY is over the 200 EMA. Yeah, tomorrow's CPI report is going to be very big. So again, stick around for CPI tomorrow, guys. Tomorrow we're going to be live very early. We're going to start the stream pretty early. So stick around for that. CPI goes live at 8:30 Eastern Standard Time. And so again, stick around for that. That's a big report, very, very relevant report. And so, yeah, stick around because that's a big report. We might trade a little bit, so let's trade. We've got a really gang of a video coming out after this report too. All right, team. Yeah, we got a nice video. Again, we still got a couple minutes left until we hit 2:30 market time. The market's going to start to get more volatility as we get closer to the bell. We'll probably day trade a little bit here. My day trading strategy is very simple. We're very flat on the day now. And again, we've been funded in a couple different accounts. Here's the E-mini, and this is the E-mini in futures. A lot of people don't realize in futures you can day trade, and there's no PDT rule. And so you can see I can buy market, sell market, buy bid, sell the ask just like stocks, except there's no PDT in futures. We got an upward trend happening though, and you can see the SPY. I might short this a little bit here. I'm gonna short a little bit. See if we get a breakdown here. I wanted to see if we rejected at the previous closing price, but it might be a bear time. We're approaching the volume weighted average price is the only thing. And so I want to see if we flush back down here. There we go. There we go. I like the rejection. We're flat on the day now. Yeah, the SPY broke over the previous closing price. We'll probably have to cut this pretty soon. I'll let it work. I don't mind letting it work. It's not like a huge risk trade for me. And again, we've been funded on multiple accounts. Again, if you want to try to get funded again, I can buy market, buy bid, sell the ask, just like stocks, except there's no PDT rule. So I can actually do it without red tape. And these funded account programs are allowed in futures too. So check it out. Well, I can buy gold or I can short it. All right, so yeah, we're gonna have to cut this now. It's just popping up too much. I wanted to give it a chance to reject the volume weighted average price. It's close, but yeah, it's just too much, I think. Big bull response here, which is surprising. So we'll cut that. Five minutes to what? Yeah, it's all good, man. Again, we got to take some risk occasionally. And so it's all good, man. Let me see what I'm at. Sorry, I gotta switch to see. I've gotten funded on 3 accounts over the last couple of days. Again, here's one of them. But today's a tough day, man. Look at the SPY rip. There's rip in my face, man. Am I up on this one? Let me see what I'm up on this one today. Okay, yeah, we're green. I mean, again, you got to see we're already up 250 on the day in the other one. So here's the P&L. And so we've got a cushion on this one. We'll probably just keep pushing towards this cushion. And make sure it's the right one. Yeah. Wait. Okay. Wrong one. Man, look at the SPY rip, man. The SPY likes this report, dude, which is surprising because I didn't think it was necessarily super bullish as a report. Chat's hilarious, man. Vegeta, hey, just hilarious, bro. Honestly, I'm skeptical to say stuff a lot of the time because I feel like people are trying to trap me into saying something. The gold guys show up heavy, bro. The gold guys show up really heavy during these big FOMC meetings. Like the gold people, man, they're here, bro. They show up. Yeah, I mean, people are making fun of me because I lose once. Like, listen, y'all will be okay. Again, we've been funded on multiple accounts. Like, my TOS account has got like 60K in it. And so a $200 loss, even on the funded accounts, not that much. And again, the market's starting to rip back. And so what's bad for me shorting there is good for me in futures. Like, we basically made it back in futures. Here's my swing trade investing portfolio too. So we're up nicely today. We're up about $170 here on our equities. Day trading, I'm mostly short bias, but long term, I'm mostly bullish. Look at the SPY rip. Let's look at the NASDAQ, see what it's doing. I hope I'm in a Roblox call option. It's a $30 call option. And Roblox is at what now? It's like 30. Roblox is at $32. I'm still red in this call option, bro. I have no idea what I'm talking about with options. Yeah, the gold dudes, man. They're here constantly. Buy gold, watch gold. What's gold doing? Sell NASDAQ. Thank you later. When did you say that? At 125? Well, maybe. Again, Q all the way back up. So here's the NASDAQ right here. Like the NASDAQ is the Q. Q back up to 370. Pretty choppy day, though, all around. This is our power hour. Powering. Hey, honestly, at CPI tomorrow is going to be chaos. I don't know, man. Gold's not an ant. Gold has outperformed the S&P over the last 20 years. Gold's like, again, I'd always say this stat, but gold is like 6x. Oh, it's like gone up 6 times its value over the last 20, 25 years. S&P, I think it's like 3x, 3.5x maybe. And so, I don't know. I like gold, but buy gold. I don't know why Bitcoin is down. We did a crypto show today. Again, I have no idea why Bitcoin's down. All right, there's a decent little pullback, though. There's a pretty large pullback here. Why is there no movement in gold? Gold doesn't actually move a ton with these economic reports. Gold is already up a huge amount. Just to look, I'll pander to you gold guys a little bit here. Gold has had a really good day. A really good day. Like, here's gold. Gold, when I woke up this morning at like 5 a.m. my time, gold was up big. Like, here's gold today. So, yeah, gold has had a really good day. It's pushed up a lot. I mean, it's still down over the last, like, 6 months, but it's a much better pop. All right, we're going to buy this dip now. We're going to switch to a long trade, I guess. All right, so there's 25. There's 50. I like this gain, but I'm gonna go ahead and lock that in and just take the profit. So now we are up in this account 300. You know, in this account alone, man, we got a 5-to-1 win-loss ratio today. I might buy it more if it pulls back some more, since we have a cushion and we can. Sometimes when patterns look too good, it's almost too easy, and they always fake you out. Stop spamming. Oh man, I look the other way and I'm down, man. Sorry, I'm trying to multitask here. And so yeah, we're down a little bit. We're still up 200 or so on the day. Now we only have a 2.5 to 1 win-loss ratio, and it's all right. We build up a cushion. We can probably take some larger risks. Now, what I always try to do is I build up a cushion first, and then if we have that cushion, then we are okay with taking larger risks, right? But it takes time to build that cushion up. I never take big risks without a cushion. And so if I don't have, and we have a video debuting actually right after this stream in which we talk about this. But yeah. All right, team. Got a nice little flag pattern here, though. Let's see if it bounces. All right. All right, we did get the pop, so I might have been just late, man. Maybe I've been working for like 4 hours straight, and so I might just be tired, dude. Maybe it's just not the time. All right, so we did get another rip right back up here. All right, team. All right, so we did get a little pop up. All right, so again, we're up a little bit too much here for me. I don't know if I want to take it yet. Hmm. All right, so we still push it back up here. Catch you back up with the chat. Gold guys are back, man. Pawns overworking. What do you guys think about PayPal? I think I'm in PayPal right now. I don't know what it's doing today. Again, the market's actually slightly green. I'm green on PayPal today. Red overall on the trade, though. So no fix on the audio. I'll just imagine your reactions. Can y'all hear me? Am I silent? Is my audio off? Can y'all hear the music? All right, so look at the SPY still rip up here, man. Wow. I'm just glad volume is starting to get a little bit more heavy back here. Okay, we can hear you. Okay, so old boy's just mad. Or old boy just, your internet's all messed up, dude. Because it ain't me. All right, I'm going to mute the music real quick for a second. And again, we're watching the market. The market's pushing up, dude, pretty nicely here. I can't complain. Let me make sure I'm muted. Okay, yeah, music's muted. Okay, good. And again, let me know if you think the market's going to break highs. Hey, shout out to AT. Thank you so much for gold trade. You should buy or sell and why. I have no idea about gold. But honestly, with how many freaking gold people are here, I wonder if I should cover gold more because they are hyped about gold. Told y'all. Because it's GG up. Yeah, I mean, gold's up a lot today. Again, you can kind of see it right here. This is gold. Pretty good day. It's moving up with the market. Why should I buy gold? I mean, gold is one of the best long-term hedges against inflation. You know, investing is all hedging against inflation, right? So you buy real estate to hedge against inflation. Real estate, for the most part, will keep up with inflation, regardless of specific appreciation or depreciation on anything else. Um, gold, gold keeps up with inflation. The S&P 500 is used to keep up with inflation. It's all inflation hedges, right? The reason people invest in money is because if you don't invest over time, you are going to lose money because of inflation. Your individual dollars are going to be worth less. The easiest way to put it is because in 10 years, 100K is going to be worth much less money, like 100K in buying power, right? Like you try to buy you try to buy $100,000 house today. Here's a better example. You try to buy a $300,000 house today, you're going to get a specific type of house. You try to buy a $300,000 house in 10 years, you're going to get a much worse house in 10 years for 300K. And so if you don't hedge your money against inflation, if you don't invest in different things that are inflationary hedges to keep up with inflation, you're going to lose money over time just sitting on cash, right? And so the argument for gold is simple. It keeps up with inflation. If you look back at the 90s, gold has 6x. Gold has 6 times its value over the last 25 years. The S&P 500 is only about 3.5x. And so it's outperformed the S&P 500 over the last 25 years. Of course, Bitcoin has outperformed everything, but still, diversification is a powerful thing. You want to, in my opinion, you want to buy a lot of different things to diversify yourself over time. You buy multiple different things to diversify yourself over time. Okay, so they say they're bots. So let's see. Buy gold. So Saya, say something outside of buy gold. If you're not, I'm gonna ban you forever. Do it now. All the other people pumping gold. Prashant, you do as well. Let's see who are the other gold pumpers. Gold coming to 1850. B Hill, you do it as well. We're gonna see if they're really bots or not. Okay, there's Saya. Okay, you're not a bot. It's okay. And listen, you can pump. You can be bullish on gold. That's all right. Like I'm okay with that as long as you're not on. Somebody saying fix my audio. Is my audio bad? Is my stream bad? Let me check, dude. I don't even know. I honestly I don't know if my stream's good or bad right now. How do you feel about the market pumping before the Fed report? I think tomorrow's CPI report is going to be the most influential thing, right? Like tomorrow's CPI report is going to be the big one. Is my audio bad? Let me check, dude. Audio. No, we got my Yeti microphone. I mean, when I turn this way, it's going to be a little bit more choppy, but my audio is good. But yeah. All right, guys. All right, so we're gonna get ready. All right. So we're gonna schedule a premiere. We're gonna schedule it for today. We get it for. Let me set this premiere up so it's not such a long countdown. All right, and again, we're gonna debut a video today. Again, we're gonna be debuting a video today. You think we'll go bearish? I think CPI tomorrow is gonna be the biggest influence right now over everything else. Anything else, everything else, CPI is gonna be the biggest, most influential thing for sure. No, they're not boss. They're talking to us most of the time. We're all in this together. Everyone in this mic all together. Is just your mic for a minute there? Yeah, I mean, if I turn this way, my mic's gonna be worse, but it's all good. If a real house is worth more than 1.5 mil, I'm gonna live in a Barbie house or a dog house, bro. Some of those dog houses look comfortable, dude. I'll tell you this, bro. I'll tell you this. I find it incredibly comfortable living in a very small area. I think evolution wise, like instinctually, I think humans like small, comfortable spaces better than large, roomy spaces. To be honest, I think like instinctually wise, I think humans like it better when we're small and we have smaller space around us where it's comfortable. Because I think that's more natural to the way we used to live as hunter gatherers. But maybe I'm wrong. I could be just wrong. I don't know. What do you guys think? Okay, volume is good. Yeah, Chart Prime's really dope, man. It's really nice. Let me get the redirect going. Maybe. Yeah, I'll talk to the Chart Prime dudes. They're pretty cool. And honestly, they drop some really nice stuff. Yeah, so the FOMC minutes report is just a detailed like breakdown. It's a reaction to the last Fed meeting. It's a reaction to the last Fed meeting. That's all this really is. It's not an actual Fed report. It's just a reaction to the last one. I couldn't find any financial news during the FOMC meeting. All they talked about are the recent conflict. Yeah, because this isn't the actual Fed meeting. This is what's called the Fed minutes report. And so it's a detailed, like 12-page report reviewing why they chose to make the decisions they did in the last meeting. In this case, it was the late September meeting, as well as giving some foresight into what they might potentially do in the next November meeting. That's all this. It's the FOMC. It's the FOMC meeting minutes report is technically what it's called. And so that's what this is. That's why there's no actual talking today. It's not an actual like meeting with Jerome Powell. It's just a recap of the last one and a detailed explanation of why they chose to do what they did. You know what I mean? That's all this is. And so yeah, let me know what you guys think. All right, guys. We also have as soon as we close the stream, yeah, I'll good watch it. Again, our goal, like, I don't sell a course, I don't sell a service myself, I don't claim to be an expert, I don't even claim to be a good trader. I just give people free economic reports data. We stream all the major earnings reports. Next week we got Tesla. Tomorrow we have CPI, and yeah, we just got a lot of stuff happening over the next couple of days. So again, in less than a minute, I'm going to close this stream, and we're going to detail, the FOMC minutes report we got. Yeah, I mean, I just gotta. Some people just gotta get banned. Cry about it, dude. Hey guys, I'll see you guys later. Again, we're gonna be detailing this report as soon as I end the stream. It should immediately bring you to the next video we have. If it doesn't, for whatever reason, check out the link right here. And yeah, I think tiny houses are dope, dude. I think they're really cool. But again, guys, we're gonna close this stream down. I love you all. Y'all be safe, and I'll see you guys tomorrow. Again, as soon as we close this stream, it's gonna bring you to the Fed Minutes report stream. Or no, it's gonna bring you to the a simple and easy way to get funded on Top Step, as well as watch to the very end of this upcoming video because we're gonna break down the strategy I use, like the actual trading strategy that I use, as well as my risk management system that I use to get funded on multiple times. And so, hey, I love you all. Y'all be safe. I'll see you guys over there. Again, it should bring you right there. If it doesn't, let me know, but it should bring you right there. I'll see you guys over there.